Welcome back. It's Markets Today. I'm your host, Mbithe Mwema. It's Friday. Friday, we get to take it down a notch. We look for one company, trying to understand. We have been listening to you. You have been giving us a list of companies. We also continue to invite you. Give us a list of the companies that you want to hear about. We've covered Kenya Re. We have covered CIC. Today, we are covering Centum. So we always want to listen to you and be able to just help you understand a little bit better about some of the companies that we are looking at. This week, we did see a bit of clamor in as far as Centum is concerned, largely because of the drop in price. This share price has come off and we were asking ourselves, are we missing something here? Today, we will take you through who is Centum as a company. Let's start off with an overview of what Centum does. Well, Centum is an investment company and it operates as Centum Investment Company, PLC, and it has exposure in different sectors of the economy. How have you interacted with Centum? You've probably interacted with Centum in one way or the other if you have been to Two Rivers. Two Rivers is one of their projects and they have made a huge investment. That has been their largest real estate investment. Our next presentation is just going to give us an overview of some of the sectors that this company is involved in. Centum as a company is also listed on the NSE as part of the investment companies that you have access to on the Nairobi Securities Exchange. It has a cross-listing on the Uganda Securities Exchange. By a cross-listing, that means that you can buy the shares in Uganda, the equivalent of NSE in Uganda, which is the Uganda Securities Exchange. Only difference is that you won't be buying them with Kenya shillings, you would be buying them with Uganda shillings. Why do companies cross-list, you might ask? Companies cross-list to widen the number of shareholders that it could get access to. In other words, cross-listing is a way of distribution of your shares where you list in another country, in another market, opening up your shareholder list to say people in Uganda can be able to buy into your story. In addition to that, this company, Centum, also has very interesting real estate opportunities in the Ugandan market, so it was only logical and strategic to have its shares listed in Uganda so that some of its consumers of its products could also, in a similar way, be shareholders. In terms of interest, you know Centum is focused on private equity, quoted equity, and real estate investments in East Africa, as well as investments in listed securities across sub-Saharan Africa. When it comes to real estate, as I had mentioned, you know Centum through Two Rivers. If you are in Nairobi, I'm sure one way or the other over the last couple of years, you've probably made your way to Two Rivers. That's a massive real estate project, one that was quite challenging, but they were able to deliver on. That's affiliated with a company that's a subsidiary of Centum. That's the primary way that you probably know Centum in one way or the other. When it comes to other financial investments, Centum has opportunities in the listed equities, that's companies that are on NSE or equivalent exchanges across Africa, and it also has another profitable arm, and it's also a sizable arm, which they call the private equity space. Private equity, if you have drunk a Coca-Cola, some of that money has found its way back to Centum. It has a stake in Coca-Cola beverages, the operations that are in Nairobi and that help to deliver the fantastic drink called Coca-Cola to you, one that I will certainly most enjoy today, especially in this sunlight. Then when it comes to investing in other quoted entities, they would look at countries such as Egypt, Nigeria, look for opportunities there, and put their money in that space. And finally, you probably know Centum in another way or form by virtue of Nabo Capital, which is an asset manager that is wholly owned by Centum and brings you asset management products that are available to you if you are looking for a money market manager. And for Nabo, they give you the option of investing in dollars or investing in shillings. Let's take a look at what the next thing about Centum that you need to know today is all about. Other business lines, we've talked about largely some of the key projects. Real estate, Two Rivers, you know them from there. Energy, they have IPPs, they have contracts and concessions from the government of Kenya to deliver a couple of energy plants. They are doing Awamu as well as others. Financial services, you have Nabo Asset Management, that's the key one there that engages in terms of asset management. First moving consumer goods, we've talked about that, their stake in the likes of Coca-Cola as well as Carlsberg, which was a company that sells alcoholic beverages in the Kenyan economy. Marketable securities, they have that arm, agribusiness, ICT, education, and health. So you've probably interacted with Centum in one way or the other. Those are the key business lines. Let's take a look at the next key information you want to know about this company. You always want to have a deep dive when it comes to understanding who are the managers of this company. The top managers, we have the Chief Executive Officer, that's Dr. James Moria, who has been there for over a decade, started as a very humble beginning as an intern in the company, and has been able to see the opportunity and rise to the level of Group CEO. Dr. James Moria has been celebrated for his contribution to this particular sector by the Innovation and Leadership Management team, as well as always challenging the boundaries and trying to do more in this market of Kenya. Wambua Kimeu was recently appointed as the Group Chief Finance Officer. Wambua is an accountant by profession, has worked with the Big Four companies, and he joined Centum, was part of the private equity team, but now he is the Group CFO. So the team has a very good team of smart individuals, highly experienced, very innovative, and very adaptable to understanding and executing on opportunities in Kenya. Now, beyond all their strategies and what they do in as far as who the leaders are, what do the numbers say about this company? Let's take a look at what the numbers say. The last reported numbers, before we look at that, the price. Today, we are looking at this price because at the very tail end, it's trading at 18.5 shillings per share. That was the price yesterday. January, it was at 29.6 shillings per share. How do you explain this differential moving from almost 30 shillings to below 20 shillings, right? What has really happened to actually cause this drop, which is slightly above 30% drop? First and foremost, there has been the negativity in the market. Over this period, COVID-19 happened, and that impact actually affected more or less all the stocks on the NSE. There was a loss in value in terms of price in one way or the other. Some companies were able to recover, others not. For Centum today, we're asking ourselves, at a price of 18.5, what is the valuation and does it make sense? The key thing that has always hovered over Centum's financial well-being when it comes to a stock listed on the NSE is this. Centum has different subsidiaries that it invests in, and what it does, it's able to find a way of getting capital at a cheap level and extending the value of this capital and returning value to its shareholders. Until recently, this company was not paying a dividend, but it did start paying a dividend with the last dividend of $1.20 payable to all the shareholders of this particular company. Now, the issue that has always plagued this company is the kind of investments that it makes. People are, number one, probably not very clear in terms of the structures of some of the investments that it makes. And in other words, it's never very clear how does this value trickle down to the investors who are actually invested on Centum as a group level, yet the majority of the assets that they have are owned in subsidiaries, some of which are 100% owned by Centum as a group, some of them are not 100% owned. What has been the issue here? There's always been a value hang. This is the value of the share, but if you compare it to the value of the assets that it holds, whether it's real estate, whether it's operations in the fast-moving and consumer goods, whether it's energy, whether it's agribusiness or education, there's a huge differential. The current valuation and how you would look at it is you would look at the key metric, which is the price-to-book ratio. Price to book is you are comparing the price of 18.5 vis-a-vis the assets that this company is holding in its books. At 18.5, this company is only trading at 30% value compared to its price to book. In other words, if Centum was to release all its assets to its shareholders, the shareholders will get more value from the assets that are booked on Centum's balance sheet than they would get by selling their shares on the exchange. So this is a 70% discount to the book value. It's always traded at a discount. I think before the COVID-19 period, it was trading at a 40% discount, meaning it was trading at 0.6 times book. That discount has more than doubled. It's trading at 0.3 times book, and the discount to the book value is 70%. When I say discount, the discount means if you were to buy this particular stock at 18.5 and on the same day the company decided for the shares that you own, they will divvy up everything that's on their balance sheet and give you would be getting considerably more from the balance sheet items as opposed to what you would get by selling this stock on the NSE. That said, based on this basis, the management team has always felt that the market does not necessarily reflect the value that it brings to its shareholders in one way or the other. This company has been championing the move to actually allow companies to buy back their shares. This regulation was assented to. It's actually in the process. It's a regulation that has been passed by the Capital Markets Authority, and it's something that we estimate Centum could possibly look into and buy its shares back and hold it on its own books at a discounted value, with the hope that later on it can be able to actualize this value and add on to the shareholders. So yes, it is trading at a discount. The key sentiment issue there is this company does not reflect what is holding on its books, and the investors have not been very happy. But the fact that it's paying a dividend of 1.2, it's currently at a yield of 6.4%. So your question then is to understand, will this company keep paying that dividend of 1.2? And if so, then you kind of want to consider it largely because of the dividend yield. Next slide walks us through the financials for this company. We have the revenue lines there, then we have the net income there. Revenue in the blue line, the purple line, sorry, is 31st of March 2019. The gray line is 31st of March 2020. We have the revenue there. The net income was more or less flat. So this company, what has been happening over the last 6 months or so, it's actually been relinquishing some holdings in real estate just to be able to release cash. The latest corporate news we've heard about this particular company is yesterday, GCR, which is a global credit rating company domiciled out of South Africa, actually came up with a rating for Centum, and it gave it an A+. An A+, of course, makes you wonder, is there something this company is doing that you are missing out on? Possibly something that's not been reflected on the NSE. But you always have to be careful when you're trading on the Nairobi Securities Exchange. There's what the company is doing, and that's the fundamental analysis, which is really what we have walked you through. Then there's the next thing, which is trying to understand the next slide, which shows us the number of shares that are there. You're trying to understand the sentiment of the investors and asking yourself, why are investors not buying this stock? Because you could buy something that's valuable, but if no one else is interested in it, you get sort of caught up in a value trap that no one understands, and you really don't want to be losing money. So that's the point of caution. Fundamentals, very important to look out for and to try and understand, but you also have to balance that with what is the sentiment? Are people seeing the value? Are people understanding the value? Because this, unfortunately for this company, it has constantly been trading at a discount to its book value, and that has been the issue for the last 6, 5, 8 years or so, if you will. Now, the statistics, when you're trying to understand what is the sentiment in this particular company, first and foremost, you have the diluted normalized earnings per share, and that's 11.09 shillings per share for March 20. And then you have the dividend per share, which is 1.2 for both years. And the total common shares outstanding is 665.44 million shares. Those are all the number of shares that are available to trade on the NSE. So from what we have discussed, fundamentally it is a sound company in terms of its operations. The management know what they're doing. They've been able to balance their books appropriately. They've made some money in some sectors, and they are unwinding some positions just to release liquidity to help their operations. On the flip side, this company has recently started paying a dividend of 1.2, I think over the last 3 years or so, 1.2 shillings per share. So as the price comes down, if nothing else, if this company can convince you, or if you feel convinced that they can continue to pay a dividend, then a 6.4% yield is a pretty interesting yield. What is a yield, and why should you care about it? A yield is this. You're saying, I buy this stock at 18.5. You're asking yourself, how long will it take to get back my 18.5 shillings? So how much am I getting every year? If you get a shilling 0.2, what you do to calculate your yield? 1.2 divided by 18.5 to get 6.4%. You compare this to a yield that you would get from a real estate opportunity in Kenya, that's 8%. You compare this to some of the other stocks on the NSE, 6.4 is a good return. Then you ask yourself, then do you want to allocate capital to this particular opportunity based on the yield? That's pretty much what we had to present for you on Centum. We'd like to hear your thoughts. Does this make sense? Does this format make sense for you? What more would you like to do? And are you a buyer at this point in time? If you ask me, I'm a bit I'm on the fence on this particular one, largely because the sentiment on the NSC, there could be some more weakness and I don't want to be caught out. So I think there could be other opportunities that are slightly better, but as I say, anytime you walk into a supermarket, you know exactly what you want. When you walk into the Nairobi Securities Exchange, it's a similar situation. There's 64 opportunities waiting for you. You just have to figure out the right one that makes sense for you. I hope we made that decision easier as we took a deep dive on Centum. We take a short break. When we come back, guys, I have my phone. I am so ready. What's the number is 20146. Give us an SMS. Say hello to us. Ask us something about investments. Alternatively, at Metropole TV. That's on Instagram, that's on Twitter, that's on Facebook, that's on LinkedIn, or at Mbithe Mwema on Twitter, on Facebook, on Instagram, on LinkedIn. We want to hear your voice because it's Friday and we want to talk for the next 2 days. It's important for you to tell us something. When we come back, we take you to the streets and we will be answering your questions. See you after the break.